Good morning to all traders and welcome to this week's Market Insights video provided to you by Orbex. Today is Monday, August 5th, and although we don't have a very busy day on the calendar, it is indeed a busy week. First of all, because we've had last Friday's surprise of a potential additional tariffs on new products imported to the US from China, okay, 300 billion worth of, to be more precise. And the thing is that, of course, you know, the trade war escalation now allows the safe havens gold, Swiss franc, and the yen move higher, and then, of course, risk of Aussie, Kiwi, as well as equities are moving lower. Now, this week opened also with the US index on the downside because there is, of course, a lot of chances that the Chinese are going now to retaliate as early as this week, okay? While at the same time, more Chinese consumers are willing really to boycott US goods. So that is going to affect global markets. It's like a cycle. It's like a vicious cycle that looks like it's never ending. Now, the thing is that we have this week the RBA and the RBNZ interest rate decisions, and that those two are also going to be very interesting, considering that Aussie and Q also are sliding to the downside. Of course, an effect of last Friday's message. Now, today, of course, we're going to talk about the S&P and also the US index. Before we go ahead, just for the day, we have a number of PMIs from the EU, very interesting to watch as well. If we have a bad number, despite it's not supposed to be a major one, if we had bad numbers, then it's going to drag euro a little bit lower. And later in the session, ISM, non-manufacturing PMI, very critical one to watch, and especially following last week's bad NFP that pushed the dollar lower. I want to start with the daily index. Okay, so I've changed my view a little bit. I now became now 1, 2, 3, 4, 5 with ABC in the longer term after finishing this move. Of course, ABC looks like it's ended about that level, and that is actually really confirming that the opportunity to the downside was not invalidated. This was just a false break. Of course, now that was the last wave to the upside, okay, wave 5. So we are now most likely looking to break outside this ascending channel, okay, with an ABC move, which could even be, you know, an impulse to the downside, but I would doubt that. So we're looking at then in the longer term, medium term, to break below the 96 or so, then we should have a correction, and then prices should move back up. Back down, sorry. On the 4-hour, down on the 4-hour, so we've got the 1, 2, 3, 4, 5 correction. That was wave A minor, B minor, okay, and then C minor, with 1, 2, 3, 4, and 5 waves being completed with a false break above the 98.36 invalidation level. Now, this move looks quite like, it looks like a knife dropping on the floor, right? So, although impulsive, it could end up just being a 5, okay, with a B wave, a 3, and another wave to the downside, wave C. That could be a triangle, okay, down here, or anything else, but obviously we're a bit too ahead of time now to say whether this is going to end as anything, any sort of corrective move. And now down on the 1 hour as well. So after this is the last wave C, right? 1, 2, 3, 4, 5. And from here, we broke outside in a shorter term, outside this ascending channel. We retested that level and we moved below this invalidation level. Now we are trading around this previous high, around 98, just below 98. The next level we're looking is to reach 97.46, and then, of course, break lower than that. Or the S&P, the daily chart, I've changed my view a little bit here, okay? I was expecting prices to go up to 31.82 or so. Although not convinced, we could have this extended flat now ended around that level, okay? Although not convinced, I will just remind you that. The thing is, this move looks very impulsive, okay? So that is the reason I'm changing my view now. And now I believe that we might start seeing the wave to the downside, so complete wave C, okay? Now, of course, we really need prices to break below that level, 28.80 also, to become a little bit more bearish, okay? Because at the moment, this steep decline could just end right here, and then prices can move back up, okay? It's still not clear. So signals, although a little bit bearish now, are still mixed, if you ask me. Down the 4-hour, we've had the ABC with the C ending triangle, okay, and the diagonal. Now, once this diagonal completed, we had a throwback to complete that wave C, wave Y of the WXY pattern, or wave B of this ABC correction. And now, of course, we expect wave C, which is going to move all the way down to 27.80 and maybe perhaps a lot lower. Down on the 1 hour, we don't see much difference here. Just the ABC, this is just a complex correction pattern with the C ending here, and then we've had 1, 2, 3, 4, and 5. You can say that, and then we're expecting an ABC and then another move to the downside. That looks like a triangle pattern, so it could be a leading diagonal. So that would be 1, 2, 3, 4, 5, actually, instead of 3. But in the longer term, 4 and 5. Now, what we want to see, of course, is to see whether prices are going to break outside this pattern. Okay, if we have that, I will most likely look at wave A, B, and then another wave C, around 29.30 or so, and then prices should start moving lower. Of course, that would be the invalidation level. If prices move up and they break above 29.70, 80, then we most likely looking at breaking above that previous high and heading to around 3000s, 3200s even, okay? And that would, of course, need the support from trade and sort of de-escalation, plus increasing bets that the Fed is going to cut in September, okay? I want to thank you for watching for another day, and as always, I want to remind you to keep an eye on our blog, is where we'll cover the latest news, publish trading ideas, and provide all the necessary tools traders need.